Good morning, a video morning brief of U.S. green markets Wednesday, Jan 15, 8:09 a.m. Eastern Time. I'm Rich Paz for Critical Point. All right, level 3 top, level 3 bottom, level 3 uptrend, stalled out for the USDA report, got a goodish bullish report, has followed through. In the time frame for a level 3 top, meaning the buyer is now getting concerned, how high do they want to pay? How much do they need? Both funds, retail investors, commercials, okay? And then there's the sell side saying, how should they step up to the plate and sell a little more, move a little faster, become a little more aggressive? The model suggestion probably had a level 4 bottom yesterday. If it was also a top yesterday, it's going higher into tomorrow, into the following day. And remember, next week we have a holiday, okay? But it's a good chance the level 4 top was right there. That was the start to the upside. It had to snap back for the bottom. Therefore, it can top today or tomorrow, okay? Don't know for sure. It's a little flaky. Can't help you that much this morning on these level 4 interweek to intraday trends. For the level 3 trend, we can see this is overbought, and bar chart now has this little coloring here to help us with overbought, oversold. It's trying to roll over for a sell signal even though the market's moving higher. So if it trades below the current low of today of about 474, I believe, let's double check that, 474 March, I think that's a negative sign. And I think a down day, anytime now into next week, probably a sign of a level 3 top. I think a trade and more so close below 473.5, probably a bearish sign, okay? The market did touch our upside target and it pulled back to the prior upside target. And we do see that when it runs ahead of a target, that it's met it earlier than it should have, then that target can be a floor price temporarily. So I'm not surprised they pulled it back to it and now bouncing it. So it can go deeper into this and it can rally into next week. It does not have to top this week, and it can go as high as 490 for this trend, okay? So a tricky situation. It feels like to me, if you're bullish, I almost think, you need to be a trend follower and not worry about do I really sell right now? Do I try to maximize profit? Because there could be more upside here than you realize, okay? So trend followers, they might use today's low, yesterday's low. That's really more trend timing than trend following. Most trend followers probably wouldn't even sell till it goes below 469.25. And then it depends what type of trend they are. If they're interested in big trends for months, several weeks, then they might be even lower than that. If they're interested in just a trend in the next few days, next few weeks, then they would be more aggressive and closer to that. And then, of course, is the trend timers, okay, who try to get closer to the top or bottom and usually wind up making more trades and quite possibly lower accuracy even, but they can also manage risk a little bit and sometimes maximize profit. All right, at any rate, the trend is up, okay, and it can stay up into next week. But any time now, this week and the next week, it should pull back for a level 3. And as we'll study tomorrow in the weekly update, it may go higher still going into February for still larger trends. So that's our corn story. Let's go to the March Chicago wheat, but this is a continuous chart. And the label still says December, but it's actually operating off the March futures. Level 3 bottom, level 3 rally, and it may be all over. But the model is suggesting it can spill over into next week, and it's adding more days. It's getting a little more bulled up or friendly, but it's not offering tremendous upside yet anyways. Now what it's suggesting is this can be a level 4 bottom today and rally. So if later today it goes to a new low for the day, it goes below 542, I'd be concerned there was a level 4 bottom prior day, and it's going lower into tomorrow and maybe on into the start of next week, okay? Otherwise, there's a chance this can recover, and if it starts moving above 548.25, the current high of today, I think that's encouraging. I think the model would say, let's give it a chance. It can go higher into tomorrow, into the start of next week. Exact opposite. So again, can't be that helpful to you on this level 4 intraday type trading, okay? Now, for this level 3, I'm kind of inclined, even though I can't trust wheat as much as I can trust corn for the bullish scenario. I like this daily indicator, wide enough spread, suggesting chance for lingering near-term upside momentum next 1 to 3 days. And the model's saying, well, heck yes, it can go higher, longer than that even. Now, it is approaching overbought. So it is warning we have a right to start looking for a level 3 top. In the technical indicator by itself, and then comparing it to the model, even though that indicator is also in the model, if we kind of keep them separate, it's saying, yes, we're getting close to where the model can be right for a level 3 top. I think there's more upside to come on the wheat market. I think it needs to challenge yesterday's high, that high. It can go up to about 560, but I think that's all it's going to do, the highest for this level 3 trend. And I just got to warn you, it can be all over now, but I can't give you an alert. I can't time it to right this moment. I'll have to miss out, okay? 5-day average is nearby support. It's rolling up. It's giving us evidence that the model was right. Level 3 bottom there. We originally called it there, said it going to be one last chance, and it was. Looks pretty good to me, but let's realize next week on and the following week, it will pull back for a level 3. There will be another wave of net selling as opposed to net buying. We're in net buying right now, and it just feels like there's probably a little more upside than this at least, okay? And we'll take it one step at a time. It's not extremely bullish by no means, but I think it's got a little more to go. And as we'll discuss tomorrow in the weekly update, with those larger trends, there's a possibility of something more bullish all the way into February, okay? Now, this is the soybeans. And I have to warn you, it can be a level 3 top as of yesterday. It's met the requirements. It can go in deeper than I had originally thought. The model's now showing this, a little more time next week. The model is favoring a level 4 bottom today, but that's only as if there was a level 4 bottom right there, and it's a little iffy. So we just don't know for sure. It met this upside target. Notice the closing opening prices wanted to stay in the target range. The high poked through it, and as kind of like they said, oops, no, we did too much, and they put it back here, and they're a little more comfortable right there. We then have this overbought indicator rolling over towards a sell signal. It's not quite there the way I like it, but it is overbought, warning we have a right for a level 3 top. My guess is this market will move higher into tomorrow, and it may even extend a bit higher into early next week, but that's about it. And if we can get this to move higher today into tomorrow, I think people will be putting sell stops below the low of today, okay? Now, if it comes down much harder, like if it comes down to about 1034, I think we've probably got a level 3 top. I think moving forward, another down day, probably a sign of a level 3 top. If you have more information than I to make you bearish, it might have topped yesterday. As we zoom out for those larger trends, even though by next week it ought to be time enough to pull soybeans back, same for corn and wheat, it's interesting how we're coming up with scenarios that can move higher still as we work our way into February for those larger trends, and we will discuss that tomorrow, okay, in the weekly update. Now, dollar index might be topping now, and wheat has kind of shrugged off the dollar a little bit. The dollar's been bothering wheat. Corn and soybeans, I don't think, have paid any attention to the dollar. But it could be a significant top coming for the dollar. Unfortunately, it could be a few weeks yet to get that significant top. That may still cause us some problems. This morning at 8:30, we're going to get in a CPI inflation report. I doubt the commodities will pay any attention to it, but it can be something for the financial markets. And if it gets serious, some of the hedge fund managers, they like soybeans as something else to put in their portfolios. It may trigger something over in the soybeans. But the point is, this inflation stuff can kind of also give us some long-term clues along with economic indicators. Where are we going for future export, import type of business, okay? So that's your update for today. Past results are not necessarily indicative of future results. Keep an eye on weather. I feel like I'm a little bit behind what's really going on in South America. I know it's an Argentina story on the bullish side more for corn. There may be breaking something loose there for bullishness over in Brazil yet. I realize there's greater interest in La Nina once again. And then there appears to be good corn exports. Again, some of that may be tariff-oriented, that they're preparing for Trump's tariffs, and Canada and Mexico are ready to do serious battle, they claim. If we're going to do that, how much is that going to upset us in moving exports? We could get in a weird situation when inflation surges, and you might think commodities should surge, and they don't. They go up because of that inflation, but not as much as you think, and it's because we may be losing business all the way up just because of complications in trade. Right the moment, I'd say the markets are really more interested in what's going on in South America and China demand and overall export-import, and not so much of where we're going on that whole inflation story and interest rates and dollar, and maybe they're not even that concerned yet of what Trump's going to do starting next week. Thank you.